So what we're looking at is the low that was formed on cable and the intra-week reversal and what led up to that and what are the characteristics that generally are a part of this phenomenon. First, we have to identify the fact that the market was in a premium market. So we're in the premium range of the PD array matrix. And perhaps you saw that the market was trading up into the weekly rejection block or it traded up into an old bearish order block on the daily charts. Therefore, we could potentially see the market trade lower as we were anticipating potentially seeing this week, but it trades down into a lower level PD array in the discount. It doesn't do it over the course of the entire week. No. It does this in a matter of 24 hours. So as the market, in this case, the cable, British Pound USD, trades over 200 points in a period of 24 hours, the market reaches for a level with speed for a particular reason. And when you look at the daily chart here, we've outlined the PD arrays, and you can see that there's a daily bullish order block mean threshold, and price reaches right into that on Wednesday. When we see a fast market, we have to immediately assume that they're reaching for a level institutional order flow that is highly critical for efficiency on the interbank level. Now, that may be in the form of commerce globally, or it could be in the form of a repricing at the central bank level. Either one of those could happen rather quickly. The idea is you're going to anticipate at the beginning of the week a certain outcome, and it's prudent that you stick to that, okay? Because over the course of a career, you're going to get caught in a reversal like this once in a while, but you'll also have a checklist on things that may lead to that type of scenario. This is the reason why I tell you, regardless of whatever you think you want to be at the beginning of the mentorship, it's going to graduate into other things. But by having a well-versed approach and understanding across all the disciplines, you inherently have an advantage over those individuals that just stick to just one format or discipline of trading. You will, by default, be a better trader at whatever discipline you focus on as a career. So we're going to look at this little range in here. Now, it's not so much of a little range, but we're going to look at the move in this particular decline down into the daily bullish order block mean threshold and what the catalyst that led to that reversal. First thing you want to notice is that price is unwilling to leave the premium. So while we saw initially in the beginning of the week the market want to decline, and it was doing it aggressively and speedily, if you will, by seeing that, we could have, if we didn't understand PD array matrix discount arrays, we could have easily expected this market to keep on trading lower, maybe even going down to the fair value gap. This view leads to what many times breaks accounts, it ends careers, it dashes the hopes of would-be traders because they aren't informed. So we're going to look at the first 2 days of the week going into Wednesday's low. And I want you to understand just how much that price range is. It's extraordinary. Look at the length of that candle. For the most part, it's many times larger than the general average of all the candles here. That large down candle on Tuesday, it's pretty much a dominating candle. So it was speed at which it moved in one trading day to get down to a specific institutional order flow reference point. We're going to take a closer look at this, and we're going to look at a 4-hour chart, and we're going to refine it and give it a little bit more detail. The yellow area is that same range defined across the entire week from Monday's rally, Tuesday's decline, into Wednesday's low. And price returns to a discount PD array reversing intra-week. I want you to take a look at the low here, and it forms on Wednesday's market low, and it's trading at a daily bullish order block mean threshold. After the bounce at the daily bullish order block mean threshold, IPTA draws price up into a 4-hour bearish order block premium PD array. Notice the efficiency, how it trades right up into it. It's exactly right to the logical area where price should reach for if it's going to a premium market. There's very little movement below the level that's identified as the daily bullish order block mean threshold, and it trades right to the 4-hour bearish order block. Clearly seen with the 4-hour order block traded here. So now we're going to take it, refine it down to an hourly chart and give it a lot more flesh on the skeleton we're outlining as a market reversal profile. I want you to note the large decline from the first of the week. Now, obviously, I'm beating this in your head because this is the classic telltale sign that you have a potential market reversal profile. Every time that the market quickly starts trading on Monday or Tuesday aggressively and speedily, that's usually a telltale sign it's in a hurry to make a weekly range, or it's going to go to an institutional order flow potential reference point that could potentially cause it to reverse and go the other way. So now we can see Monday starts as a potential high of the week profile, rallies initially right from Sunday's opening, declines a little bit, and then we have another rally into the London session on Tuesday, and it aggressively trades lower, trading right into changeover from Tuesday into Wednesday, creating the low of the week, and then we have an aggressive move off that low. This right here, this price decline, the speed at which and the magnitude of which it moves is the telltale sign. That's the characteristic that leads you to, okay, we're really moving quickly and we're covering a lot of ground in the beginning of the week. Whenever that happens, you immediately start looking for higher time frame PD arrays that may cause or be a catalyst for an intra-week market reversal profile. Speed in price is indicative of them getting to a valuation point. When price is in a hurry to get somewhere, think about when central banks reprice. For instance, when they do interest rate announcements. There's very little time from where right before the announcement, then the news comes out and then the rate changes. That is not attributed to buying and selling, okay? That's a repricing based at the central bank level. It's a sudden thing, and that's why there's such a wide disparity between where price is at one moment and all of a sudden it's somewhere else. That repricing is a response to a central bank intervention or interest rate announcement. When there is no central bank involvement and price is just aggressively and speedily moving, okay, that's based on evaluation through speculation. So they're taking the market down through IPTA, in this case, down to a daily premium to discount range. In other words, it's moving away from a premium down into a discount PD array. But we're still in the larger premium range. The only thing it's doing is it's showing a willingness to get back down to a discount level. Okay, think about how I showed you in the previous lesson how you can grade modular, smaller ranges in terms of premium and discount arrays. That same thing is being used here, but just in scope of keeping it in the upper portion of the premium range on that daily chart that we've broken down in lesson 5. So while we're still overall in a premium market, longer term, short term, it can continuously move higher and keep making higher highs. So while we are in a premium market, the market is showing a willingness to not, here's the key, not move out of a premium market. In other words, why didn't this continuously go lower Wednesday into Thursday going into the discount market? Because it needs to go higher. It wants to go higher. So if it's not going to go lower and it wants to go higher, where do we focus? We focus on premium PD arrays. Now Wednesday breaks a short-term high, and then we start seeing evidences of institutional sponsorship on every bullish order block. Every order block that forms with a down candle or a series of down candles, we extend it out in time, and you can see them capitalizing, each one of them with new long positions, and we're seeing a positive confirmation because price is quickly surging away from that level. Every instance we see new evidences of institutional sponsorship and up into a fair value gap premium PD array. Now intra-week reversals will many times look to return to the previous balanced price range or exceed it. Now what does that mean? Think about the market maker sell and buy profiles or models. In this case here, this could end up becoming a market maker buy profile. We have the consolidation known as, in this example, as the price balanced range. In other words, price is in a small little range and then it leaves it on Tuesday. Aggressively sells off. We have the smart money reversal in the Tuesdays, Wednesday overlap. Then we have a low risk buy on Thursday. And then we have a continuation or reaccumulation on Friday. But price is traded up into that price balanced range all over again. So when we see that, this could be the end of the move. It can be. This could, all that's been necessary is for them to trade right back up to that price balanced range. But we always have to have the likelihood on our mind that price may exceed it and go past it, which is what the market maker buy profile really aims to do. It take out the liquidity above and on high. In this case, we have a lower high formed on Tuesday than Monday, so it may not necessarily need to go above it, but personally between you and I think it will. The evidences of the fact that the market's moving quickly at the beginning of the week, this is Monday and Tuesday, okay, or one of the two. If we see sudden, quick movement in price and magnitude, here's the key word here, it's got to cover a lot of distance. What's the average distance of the last few days? If it exceeds it a lot, whatever the average daily range is for the last 5 days, if it gets well above it, chances are you're probably going to see a market reversal profile. It doesn't mean it always will happen. It just means that start considering it. So when we move forward and going through price action study, it's important that you understand that knowing the higher time frame PD arrays will aid in failures. That means when you have a trade that doesn't seem like it's working out for you, even though you're profitable, chances are it's probably better for you to get out of it and look for another entry point. If it doesn't give you a strong entry point, chances are it's probably going to be a market reversal profile. Wednesday or Thursday reversals generally form every month. So no matter what pair you're looking at, there's generally some kind of reversal of sorts that can form. It's a generic concept. It's very simple things that leads up to it. The classic telltale signs are the magnitude at which the price moves on Monday and Tuesday. Okay, so it's only 2 days you have to focus on. How much is price moving on Monday and Tuesday? So if you're seeing a lot of movement in your favor and it's really covering a lot of distance and it's doing it quickly, many instances you're going to see it like this week really built in on one trading day. When it does that, consider the higher time frame PD arrays because it's probably going down to a valuation or a higher level valuation point, and then it's going to have a lot of sponsorship come in, and that those flows are going to turn the market. It's going to turn it the other way. Now, consider swing trading model overlap possibilities. And we've talked about the likelihood of using short-term trading concepts and one shot, one kill. And now we're going to blend or overlap trading models to help you kind of formulate a better understanding. Here we have that same area price action. And what I've done was I've outlined it in terms of a premium and discount PD array matrix. So we can see in the green area, that's the discount area. And I have it graded as well with 4 grades or 4 quadrants. Notice that on the daily chart, we have a daily bullish order block. It's trading down into that. So if we look at this model here, think about what I taught you in the swing trading model. This is a swing trade entry. This is exactly what you look for a swing trade. Now, if you're not a swing trader, if you don't think like a swing trader, then you're not going to see this as a swing trade entry. You're not going to see it as a potential setup that could many times pay out much more than what a one shot, one kill would. If you're only focusing on, I'm going to be a short-term trader, or I'm going to only be a day trader, or I'm only going to be a scalper, these types of setups will evade you. And by evading you, it's also going to become a pitfall for you. You're not going to know when there's going to be these potential reversals. You'll get caught off guard. So now we're going to take that same element, everything we saw in the daily chart that is applied, we're just reviewing it from a 1 hour standpoint so we can see the intraday price action on a day-by-day division. You can see here, reversals intra-week, they occur, here's the secret, they occur in overlapping models. Every market reversal that happens intra-week will be a overlapping of 2 types of trading disciplines. They'll be at odds with one another. Here's the rub. The higher time frame discipline will always win. That's why we have to focus on monthly, weekly, and daily PD arrays. They are the most important ones. Anything less than that, 4 hour, about as low as you want to go. Anything less than that is all day trading stuff. And if your day trading things are not in alignment with the higher time frame, daily, weekly, or monthly, no less than a 4 hour, you're really not trading high probability setups. Takeaways from this lesson again are the speed at which price moves on Monday and Tuesday, the magnitude at which it moves. There's your number one characteristic, telltale sign. You're probably going to see a market reversal intra-week. And look for overlapping opposing trading models. If one is suggesting a buy on a higher time frame, while on a lower time frame, it's looking like it may continue going lower, the arm wrestling match is always going to be won by the higher time frame.